Sign up today.
The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the Taco Tuesday, the June 16th edition of today's Trader's Edge. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We're going to go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. But much more important than that, during this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in, 877-927-6648. Phone lines are open. If you can't dial in, well, we've got you covered there too. Let those fingers do the walking. Go ahead. Send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question and in our Tiger's Den, well, and our YouTube channel. Any ping will do. So let's go ahead and get this show started on Terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got all the indices in the green, up a couple of percent out here. The weak indice would be, what is the weakest indice out here? It's up nearly 2%. That would be the composite. The transports are up 1.9%. So they're sort of the weakest out here. But we're going to take the numbers, schmumbers. We're going to go take a look at where's price trading, support, resistance, so on and so forth. Spot volatility next trade out at 33.52. Gold's up $10. Silver up 25 cents. Light sweet crude up 83 cents. Lead the charge. The upside today, dollar-wise, it's Amazon. 1 0.6% up $43. AutoZone is up 27. Eli Lilly's up $24 or 17%. Google's up $24, nearly 2%. To the downside, it's Axon Enterprise up 7%, $7. Nvidia Corp is down 1.5%. Tesla's off $3, no big deal. Trading out at $9.87. So where do we want to begin? Good question. Let's begin by first turning on the chart so you can take a look at those. Okay, good. We got that important thing out of the way. Let's begin, I guess, big picture. Yeah, let's begin big picture out here. So to begin big picture, what are we going to do? I'll start with this chart here. This is important. I believe it's important. You guys can put this on your charts as well at home. It's very easy. You don't need any kind of technical analysis. All you need to do is be able to identify the high and low for the prior year. So what we have on our chart for the diamonds, upper left-hand corner, is the low, which is 226.72, and the high, 286.85. Inside the SPY, the high for 2019 was 323.80. Now, what's interesting about the SPY, if you take a look at last week's high was 323.41. Again, the high for 2019, 323.80. Now, why am I even pointing out the high and low? Because that's really a good question out here. Here's the deal. No market could possibly be breaking out unless you are trading above the prior year's high out here. In fact, we take a look at the diamonds and the SPYs, both the high of 2019 and the low of 2019 have been exceeded. So we know we have a key reversal bar that is in place at the moment on a yearly basis inside of those two. Well, we can stretch that to the Russell 2000 as well, bottom right-hand panel. We know that in 2020, price traded above the high of 2019 and below the low of 2019, which are 131.54 and 167.12. Now, you go all the way to the lower left and the Qs out here, and here you can see how, you already know they're stronger. I believe you already know that. Visually, when you just simply, from a technical standpoint, you can see that they never got down to even the 2019 low. And in the case of the Qs, they are trading above the 2019 high out there. So totally different animal versus the other indices out here. So this is important because the diamonds, the SPYs, and the Russell 2000, the message they're sending to you or I, there's no breakout or anything that's going on out here. Don't get fooled by just pay attention to the numbers. Okay, so that's the first element of the big picture. Let's take a look at another element of the big picture, because I think we have to get the big picture here if we're gonna truly analyze and understand what's going on. So here, if we take a look at these charts, this chart, it's really just got four primary indices out here. It's got the Dow, the Shanghai, the Nikkei, and the DAX. It doesn't matter which one is which from a color standpoint. The point here is that major markets, directionally speaking, for the most part, so generally speaking out here, will trade in the same direction. So it is important, especially when you wake up in the morning and you're trying to get a feel for what's going on. You should really begin by taking a look at what is going on with those major indices out there. Is price breaking support? Is it trading below support, above resistance? It'll give you a feel for what's going on, just understanding this. So that we'll call that element 2 of the big picture. What else do we have on the big picture? Are you on LSD? You could be on LSD, but I don't think so, Z, out here. If we take a look at the next element of the big picture, that's the global flow of capital. So we just took, so again, connecting the dots. That's what Stevie is doing here. I'm connecting the dots, getting rid of all the BS, all the noise out there, all before Steve shared with you this information. This way you can draw your own conclusion out here. So again, understanding, directionally speaking, the way that the markets go out here. Now we switch over and we take a look at 9 different ETFs that you can look at that represent major markets. In the upper left hand, we've got the Dow Diamonds. If you take a look at next to that, you've got the UK. You can see that the UK has been in a downtrend, in a bear market that began in 2014. There is no signal here that that is over. If you take a look at Australia, Australia has been in a bear market since 2011 out here. That's when its high came in. So you can see the descending price channel. You can see the lower highs, lower lows out here inside of the Australian ETF, EWA. You can take a look at Canada. Now, Canada's doing pretty well, but even in the case of Canada, its highs took place in 2011. And it hasn't broken through its descending trend line out there, nor has China, nor has India, nor has Germany, nor has Japan, nor have the emerging markets out there. You kind of get this feel out here. So if I were to ask you, what's the message of indices, major indices worldwide? What's the message that they're sending to you? Now, understand that the U.S. market has been the strongest market, was the strongest market, still is the strongest market if we talk about the Qs. But if we talk about the Dow and the Russell 2000 and the S&P 500, we have a totally different message out there. Now, understanding this is helpful. It's also important to understand the global flow of capital. If we go back to the March 2009 bottom out here, 45 quarters ago, if you take a look at the upper portion on both of these panels, you'll see that it is the U.S. where the global flow of capital parked itself. Look at the returns. The Dow priced in dollars, 400%, 500% in terms of euros, 450 in terms of the yen, 485 in terms of pounds out here. No other major market is even close. This is what we would need to see to say that, hey, money has parked itself back in the U.S. We come back from this break. Let's go see what's transpired since our recent bond.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So we're taking a look at the global flow of capital ever since the March 09 bottom out here. And we're taking a look at all of the major markets. And it's really important to understand that we will see the global flow of capital, worldwide capital, park itself in some area. And here we've got several different commodities. We've got major markets out here. And this is the type of picture that we want to be able to see. Now, we'll take a look at what's transpired in the 13 weeks since the most recent March bottom out here. You are going to see that things are fairly equally distributed. You've got the Dow Diamonds up about 38%. That's the rate of change. Germany's up 49%. Out here. Remember, when we took a look at the major markets out here, okay, so they're up 40%, but they're in a bear market and have been in a bear market for a long period of time. We'll come back to this, but we've got a caller on the line, and we have a caller on the line. We have call-ahead seating. So let's go out to Brent in Martinez, California. Brent, thanks for calling. Thanks for holding. How are you today?
Oh, I'm doing great, Steve. How about you?
I am doing well also. Thanks so much for asking. And U.S. Steel, tell us how I can help you.
Well, I thought it was interesting. There's been two island reversals, one off the recent top, and then we had another one today off the recent bottom. And I just was wondering your thoughts on it. Looks like it's going into that swing point. It's going to have sufficient volume. So those are just a couple of things I noticed, and I just want to get your thoughts on it.
Sure, sure. So there is a brand new profile, Brent. It may have formed since we last spoke. So this was on June 11th. So it was about 4 trading sessions ago. So I can't recall when we last took a look at U.S. Steel. But what's important to take a look at, so here's the island top out here that Brent is referring to. The island top, I'll just put a little rectangle around it. And that is where we have a gap between. So here we had U.S. Steel gap up on the trading session of June 5th, and then we saw a gap to the downside that stranded the folks that had purchased on June 5th through the 10th out there, and that created that island top. Is a bearish pattern. More bearish, I'd have to say, when it's like at all-time highs or something along those lines. But nonetheless, that island top no longer exists the way that I would take a look at it. Would this be considered an island bottom these last 3 days out here? I suppose technically, but again, the island bottom would be better truly at a significant bottom versus, in the middle of a move out here. But what we do know, Brent, that we can rely upon is where are the sellers on a daily basis inside of U.S. Steel? And that's really the benefit of the profile that formed last week. And this is bearish in structure. So the number is 1066. The actual high so far today has been 1070. So it's tested, it's rejected, but it's in between the center and the top of that profile. So it's not really giving me a clear signal as to what it wants to do next. Volume, about 13 million shares, moving into a swing point that had 13 million shares. So it's moving up with volume, but nonetheless, the snipers are at 1066. So the next level in your trade that you want to see is you want to see 2 closes above 1066 consecutively out there. Does this mean it's time to sell U.S. Steel? No. We'd have to really see a break of support out here, and that break of support would be at least close below 948 or 2 closes below 948. Now, on a weekly time frame, and the week is not over, last week, what U.S. Steel tried to do, Brent, was it tried to get above, and it did intra-session, so during the week it did, the top of that profile, which is 988. But by week's end, it closed back below. So now you've got resistance between 988 and 1066. Granted, price is trading over that, but it's only Tuesday, so it's early in the week. Now, if you can get 2 closes above 1066, Brent, and with the weekly trading above the top of its profile at 988, that would then open up the move to the top of the monthly profile, and it would be 1352. So those are the messages about U.S. Steel from a profile standpoint. Before I switch over to my other charts, is there anything else here or any questions or anything that you would want to point out that we've overlooked?
No, that's great, Steve. That's really giving me some levels to be watching. It looks like this might be, if it were to close here, would be just the start of, I guess, bar 1 in this move so far.
Yeah, I think that it will be dependent upon the close today, but right now the answer would be yes. Now, the other interesting thing is I pull over my other daily chart. So we knew we have that top of that daily bear structured profile. Now when we take a look at breakdown levels, and these are areas where U.S. Steel should find resistance, we can see it's at 1107. So in addition to that 1066, in addition to the high from last week, that swing point that is trading in, now we would switch the number that you need to see it close above 1107 to open itself up to that monthly time frame. So that's coming from our daily U.S. Steel chart and its TD9 count breakdown level. On the weekly basis out here, last week was a TD9 count top. So that says, okay, just be cautious. You've got the TD9 count top now coming into that weekly bear structured profile. Just watch the numbers, watch the boxes out there. They will assist you. So there is the potential for a top out here on a weekly basis. If, in fact, U.S. Steel can overcome last week's high and close above last week's high, that game is off. And this will be signaling to us that price would make a run for 1396. And in the monthly time frame out here, I don't have anything that changes the view of 1352, but we'll have to pay attention to the daily and weekly numbers before that really comes to fruition. So does that help you out?
Absolutely, Steve. I much appreciate it.
Sure.
Just have a great day, and I'm sure I'll talk to you soon. That really helps out a lot.
Great. That's perfect. Thanks for calling. That was Brent in Martinez, California. So let's go back here, folks. So just real quickly, here is the global flow of capital, the rate of changes for the major indices out here across the globe. And what we're looking for, is there some area on here? You see, the money can't hide. You know, the idea, the Jerry Maguire, follow the money. Is that what it showed me the money? He didn't say follow the money. Follow the money was Deep Throat, right, out there? So in this instance here, we don't see anything that sticks out. Certainly, it doesn't appear to me that global flow of capital has parked itself in Germany. It's just a counter-trend rally in a market that has been in a downtrend out there. So that's helpful, or it should be helpful to you. Now, let's go take a look at what else we have. Well, Brent and I, we were just talking about daily profiles. So let's switch over to here. Now, this is going to be very pertinent to each of us out here, but especially Jay in the Tiger's Den, because he uses these TAS market profiles. And Jay, what I want to share with you is there is a new market profile that is attempting to form inside the ES Mini. It's the only future contract at this stage that is trying to form a new profile. Now, this is bullish in structure, and it's really important out here. Really important. Well, first, I don't know if this is going to take hold and form, but we use the information that we have because right now it is pertinent. So you've got resistance at 3190. 3191. So in a further counter trend move to the upside, that's resistance. That's where the snipers are sitting. To the downside, this is a bullish structured profile. The bottom, or where buyers are between 3042 and 3072. Yeah, it's 30 points. That's where the buyers are at. We can see that as price moved lower this morning, it ran right into that support level of that new daily profile. Now, if there was a close below the bottom of this profile, it's sending a change in trend signal to you. Actually, it would be the second change in trend signal that it would be sending to you. So we get back from this break. Let's go take a look at a couple of those profiles out there. Steve Rhodes with TFNN. We'll be right back. Back in the day, I joined the Hotel California in 2006, and like many of you, was drawn in by, as well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab. Bam!
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. So we're taking a look at this chart here. These are the daily market profiles for the 4 equity future contracts. And here's what we know. We already talked about the ES-mini, so we won't go there. Inside the NQ, we still don't have a close below the bottom of its profile, 95.59. Again, just showing you the strength out here. Bearish structured profile, by the way. Price right now trading at the center of its box out here, but price could make its way up to 10,140. That is the top of that profile. Now, the Dow equity future contract and the Russell 2000, both having done the same thing thus far, which is a test and rejection of the bottom of its box. So on a counter trend rally, what we're looking for are resistance levels out here. And the bottom of those boxes, because old support can become new resistance, would be those targets. So that's 26,468 and 1472. Watch those levels coming into the close. If price can regain those profiles, then that suggests, okay, I can make a move up to the center or the top of those boxes out there, and you can see those on our screen if you're watching this on Tiger TV. Now, I had mentioned that the ES Mini, if we see a close below 30.42, this is assuming that this profile holds, that would give us a second change in trend signals. Now, when I talk about change in trend signals, I've got the Dow Equity Future contract up on my screen out here, so I'll just move over to that. And on here, we have both daily and weekly profiles. The weekly are in red. You can see the levels on the very bottom right-hand panel of my chart out here. The dailies are in green. They say top D or top W, weekly and daily out here. Now, if you come back and you take a look at coming into the February 2020 area, it was on the, it looks like it was the day of, it's probably February 24th, where we had a close below the bottom of the daily profile, signaling to us the potential for a change in trend. That change in trend could have found support at the bottom of the weekly profile. Well, looks like on the trading session of February 25th, we had a close below that. Closing below those profile levels tell us about a change in trend. So we can see that. So where are we now? Well, right now, if we take a look at the Dow Equity Future contract, it's trading below the bottom of its daily profile. In order to give us a really large intermediate term change in trend, we're going to need to see the Dow Equity Future contract close below 23,602. That is the bottom of its weekly profile out there. But we already have the change in trend signal, and this came here inside the Dow when price closed below the bottom of its box on June 11th. And price is still below that. So you want to be paying attention to those market profile levels that we took a look at. What else do we need to know? Well, you know, we went over to the Dow Equity Future contract. Here, what I can do is share with you the ES Mini. I had mentioned to you that on a counter trend rally, typically you will see price make its way up to old or resistance. In this case here, old support, which would be the bottom of the daily profile. So you're looking at the very right-hand panel of my screen. Remember, this is the September contract that we're taking a look at. And so the bottom of that profile is 31.54. If you take a look at the high today, is 31.56 So it's been tested, it's rejected. Now, we want to put this together with the chart that is on the left-hand side. The left-hand side is the spot volatility index. That's in the upper portion. And what you can see here in the 50-day exponential moving average is the key level for us to watch. And that's right now is priced at 33.33. Well, that's going to be easy to remember. Those of you that like the number 3, just use 3s. 33.33. We're trading right now at 34.27. When price is above the 50-day exponential moving average, that's when there can be major price erosion inside the S&P 500. Don't trust me. Just go do the work yourself. Well, here's the work already done for you, along with boxes, squares, rectangles, whatever shapes they might be, during time periods where the spot volatility index is above the 50-day or below the 50-day. And so you can get the generally speaking message of that market. So what you're watching today is two things. If the ES Mini can close above 31.54 at its session end, combined with the spot volatility index closing below its 50-day exponential moving average, all the threes out there, 33.33, well, then you've got a bullish message. But we don't have that right now for the S&P 500 or the ES Mini out there. If we take a look at so what's the message overall to take? What's the message overall to take? We're still in this counter trend rally mode. We do not have any kind of flow of capital, not at this stage of the game, that suggests that money is now pouring into the U.S., that this is the safe place out here. We know that markets work in the same direction, generally speaking, out here. And then what we also know is we take a look around the globe, and this is something, unless you actually take a look at the charts, you can't appreciate the perspective. But there's perspective here across the globe is markets have been in this downtrend for a long time out here. The Dow is going back to its March lows. Now it's going to have to prove itself to us because there have been new support that have formed over the recent weeks out here. What do you mean by that? Well, if we just simply go back to the Dow equity future contract, that's what I'm going to do out here. I'm going to pull that up on our screen. We can also see now and take a look at Stevie's other daily chart. If we were going to look for a counter trend rally and ask you where that would stop, you would definitely say Stevie's green line. Well, if you take a look at where the Dow equity future contract is trading right now, it's tested and it's rejected Stevie's green line. That's the squiggly line that we're taking a look at. The real key number on the Dow. Yeah, we've got the market profile, so we took a look at that. But it's going to be its TD9 count breakdown level. So when the Dow formed its most recent high, you can see the Gartley cell. You can see a TD9 count top. You can see wave number 7. That's letter G. So all kinds of tops. And the key level is going to be 24,266. If you see two closes below 24,266, the message and the signal is that the Dow is headed back to March, and most likely below March. Whether that starts today or it started a few days ago, well, 5 days ago, at this stage here, not until the most recent highs get taken out will the bearish patterns. Remember, it's got wave number 7. It's got a Gartley cell signal. It's got a TD9 count top. So the top is pretty well cemented. But that doesn't mean that price can't overtake it. But when we take a look at what's going on in the market right now, from the Dow's perspective, its message is counter trend rally. It is just that's the message. I can't change the message out here. I would have to misinterpret the charts for you. Again, I can't control what happens next, but let's just make sure that we're situated. We take a look at the big picture out here, and that was the big picture. So Bo inside the Tiger's Den wants to take a look at ticker symbol JFIN. So let's go pull that up and see what JFIN is. JFIN is I don't know. I got no idea. What is this? You took a flyer on Fast Money, JFIN. So, I can't really, I can't provide you with anything really good here. I can't give you any good information. Why can't I? Whatever this is, whatever this company is or does, there's no shares that are traded, or at least there wasn't until there was some kind of pump and dump. That pump and dump out here took place on June 10th. So just a handful of days ago when it did 40 million shares. Now, look, I don't know if they've cured cancer. They've cured COVID. Well, I don't think they've done that. I don't know what they've done out here, but I'd stay away from it because the day prior to that, there were 24,000 shares. But look, you're asking me for advice on this. It's trading between its profiles. 490 is the bottom of its box, and 769 is the top of the daily profile. But as far as technical analysis on a stock like this, I don't have the tools to help you out. Steve Rhodes with TFNN. We'll be right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com and hit Watch Tiger TV. That's TFNN.com. Then hit Watch Tiger TV for the latest market information.
Try to kill two birds with one stone out here. Answer two questions with two charts out here. So we've got two questions. One from one of our denners who is interested in taking a short trade in the Russell 2000. So we're going to take a look at that and try to give some price points to be observing to consider taking that trade. And then the second question was, what was it that I saw that showed the price point of 3063 being a bottom on the move lower this morning? So, I've got the NQ. My apology. It would be good if I actually put the correct chart on my screen out here. So give me one moment to do that. Sorry about that. Nothing like confusing you. But here's now the ES mini, and you're going to see the 3063. So, John, this is a simple thing for you. I know that you are up at all hours doing your trading. As am I, although I do try to get some nice sleep out here. And so to improve my trading, John, what I did was I started, I created this tool out here, but you can do it manually, just looking at the 30-minute opening range in the equity futures contract for what I consider for the U.S. market. So that's between your 6 and 630. Those are the black lines on my screen. 3063, so to answer your question, 3063 was the bottom of that opening range, which we had seen in the 6:30 and the 7 o'clock session last night that area held. So we already knew that was an area area of support because it was tested. So it's not just that we had the opening range from 6 to 6:30, but from 6:30 to 7, from 7 to 7:30, we had that level tested. So it's been tested a couple of times. We know that it was support. Then once price breaks above that opening range, which is 30.75, well, then that's telling you, okay, you've got a market that is breaking out to the upside out here. When's the next opening range? Well, the next opening range is when Asia comes on board, and those are the red lines out here. Same principles apply out here from a breakout standpoint. Once price starts trading above the top of that range, continued momentum to the upside. Now, price did begin pulling back out here. In fact, it topped out at about 11 o'clock at night, moved sideways for the most part, pulled back into the bottom of the Asia opening range out here, and then we had Europe open at 3 o'clock this morning. 3:30. So there's the opening range on that. So we're at this stage here. So it becomes a very possibility or potential for a support level. Now, price is trading above all opening ranges. So unless we see some kind of topping signal on a 30-minute time frame, we certainly don't have any signal to say there's momentum to the downside. Not in the rest of this, not in the trading session as we see it right now. So, okay, you see that. That helps you out. And by the way, that opening range for those 3 time frames, John, and everybody else that is out there, that works for Goldilocks as well. If you take a look at gold out here, here's the gold chart with the 30-minute opening range bars out here. If you take a look at where resistance is today, extremely helpful to you. It's not by coincidence that this happens. You've got to, when we just spend time taking a look at understanding, to understand the markets, we cannot focus on just the U.S. We can't focus on what's the NASDAQ doing or what's the S&P 500 doing. That has to be a part of our analysis. We've really got to understand what's going on across the globe. It's really important. If you take a look at Goldilocks out here, it is not a coincidence that it finds resistance during today at 1739.20. Now, how important is that if you see a 30-minute close above 1739.20? That's signaling to you a breakout because you'd be trading above the opening range levels out there. So that's the opening range. Now, let's come back to is it time to take a short inside of the Russell 2000? Or when would be a good time to do that? Well, if we take a look at the opening range levels out here for the Russell 2000, one could conclude that, you know what? Since price is trading above the European opening range, that's at 1443, unless we see a really good topping signal, maybe now is not the time to take that short position. Maybe let it prove itself to you. Maybe let it get below a 30-minute bar close below 1443. Or maybe even better yet, if you want the confirmation out there, even though you've got to give up a few points. I don't know when you say, should you go short the Russell 2000? My inclination was you're not trading the futures contract. You're trading the ETF out there. So if you wanted proof, you'd have to see price close below 1418.80. But let's go take a look at patterns on the short-term time frame or the longer-term time frame charts out here, because you really want it to prove itself to you. In my opinion, if you're trading, Mike, one of those ETFs out there, you're willing to give up some price for the consider assurance. It's not really assurance, but to increase your probability that key levels of support have failed. Now, look, those opening range bars reset each evening, and I don't use the prior opening range bars. I only use the current opening range bars to assist me in helping to understand what the market may or may not do. When is it trading back to a level of support? So let's begin by taking a look at the Russell 2000 for you. As we've opened up the weekly time frame chart, what do we know about it? Well, we know that old support, its TD9 breakout level at 1534.20 has become resistance because that was tested last week. We also know that last week was the bar following bar number 9 of a TD9 count, right at resistance. And so therefore, we have a topping signal. Takes us to this week. What do we know about this week out here? Well, Mike, we know that price found support, and it did that yesterday, did that Sunday night, really, is when it did it. And where was that support level? Stevie's red line for the weekly time frame, 1324. So right now, you've got price in between support and resistance. Your better trade setup, I don't know if we're going to get there, would certainly be selling the IWM or the Russell 2000 when price gets up to the 1534.20 in the equity future contract. But maybe that's not going to happen. Let's go take a look at the daily time frame. Why might that maybe not happen. Now, if that is good grammar out there, then and please just simply go ahead and give me an A, would you? But I know that's not the case. But grammar aside, if we take a look at the daily time frame for the Russell 2000 equity future contract, well, Mike, price is trading right into Stevie's green line. So it's at its counter trend resistance on a daily time frame at the 1451.50 level. You also know you've got support at 1267.20. So inside there becomes your reward risk. You also know that if price were to close above this bear sash candle, this Gartley sell, that being short would certainly be the wrong call. So now we're trying to figure out, okay, the daily maybe's at resistance. It's only 149. We don't know what this bar is going to look like coming into the closeout here. So we've got to go take a look at other time frames. Again, I'm just backstepping out here. And I'm backstepping if I look at the 5-hour time frame chart, Rhodes momentum indicator bottom. Is there a top? Not on the 5-hour time frame chart. Where could that top take place? Likely around 1516.80. It's breakdown level. Bar number 6 of a TD9 count, potentially depending on where it closes at 2 p.m. out here. But no topping signal on the 5-hour. But it does give us a good spot to take a look at resistance. Now that resistance, of course, Mike, could take place overnight. You can see price get up there, test it, move all the way down, but you can't control that. But what you're looking for, is there information right now that says now is the time to enter? Well, if you take a look at the 2-hour time frame chart, the answer is no. We don't have a topping signal. This would say about 1516 would be the number because price came back, tested Stevie's green line, tested the center of its profile out there for the 2-hour time frame. So no signal there. Let's take a look at the 60-minute time frame. What do we have here? I don't have any signal. Price is trading above its bullish structured profile out here, Mike, so I don't have a signal there to go ahead and take that short. Doesn't mean that it can't sell off, but you're looking for a great signal. And within the next 2 seconds out here on the daily time frame, you're going to go ahead and take a short. At least wait for price to get up to 1461, about another 10 points higher than where we're at. 1475 would be the better spot. We'll be right back.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive.
We take it every morning. Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So for James, James wants to take a look at ticker symbol PRSP. That is Perspecta Inc. out here. So as we take a look at it, and James is looking for a long entry point in this, we can see that what it's doing today on a daily basis, it's testing the top of its bearish structured profile. And that level out there is 25.06. Price right now trading at 24.90. Volume behind today's move, about 492,000 shares. Last time price was up here, there was 4 million shares. It was light on volume. And then there was 1 million shares back on June the 5th. So very light in volume. And so price is up at resistance. Price is also at resistance on the weekly time frame. The top of that profile is 25.82. Both of those are bearish structured profiles. Now, price is trading above the center of the box. You need to see price trading below the center of the box in order to suggest that price will move down to the bottom, which should be 22.12 to 22.29 daily and weekly. Not enough data out here, James, on the monthly time frame for it to provide us with any assistance out here. So now let's take a look at our other charts, our white background charts, looking for any other signals out here. So from a signal standpoint, price is trading above Stevie's green line at 24.19. Again, you're looking for an entry. We're going to say your entry point here still is in that $22 range out here, but I don't see any kind of topping signal. I don't see any kind of topping signal on the daily time frame. How about in the weekly? What do we have out here on the weekly? It's populated. Well, it's got a TD9 count top. So closing above the high from a couple of weeks ago, really closing above the top of its weekly profile would be bullish. At this stage here, because we know we've got that bearish structured profile, we already discussed that. This is suggesting a move back to Stevie's red line, which is the bottom of that weekly profile in that 22, 29-ish type area out there. Any move below that, your entry would be 17.39. But right now, it's in that 22 level. On a monthly chart out here, again, no help to me, even on my white background chart. So, James, I hope that helps you out. Folks, thanks so much for being here. Have a terrific Tuesday. And stay tuned for 2 more great hours. Your favorite polar bear, David White's up next. After that, Tom O'Brien to take us on home. And I'll see you on Wonderful Wednesday. Have a terrific Tuesday, folks.